Baidu's third quarter earnings call, well, it was one of the most interesting of the season. It really revealed a company that's right in the middle of this massive, massive transformation. So let's dive into this and really unpack what these numbers mean for Baidu's big pivot to what they're calling an AI native future. Right off the bat, you're hit with this huge contradiction. I mean, look at this. On one hand, Baidu posts a 7% drop in revenue. That is the worst sales decline in the company's entire history. But then, on the other hand, they deliver this non-GAAP earnings beat of 33% that just completely smashed what Wall Street was expecting. So, what in the world is going on here? Despite that really messy headline, the market seemed to find the signal in the noise. The stock actually closed the day up over 2.5% and on heavy volume, too. Now, that tells you that investors were looking right past that record revenue drop and they were focusing on the story underneath, the story of that huge earnings beat. Okay, let's break down the key numbers here. Revenue came in at 31.2 billion RMB, which just barely beat the forecasts. But the real story, the one everyone's talking about, is the non-GAAP earnings per share. That's the number adjusted for one-time stuff. It hit 11.12 RMB, absolutely crushing the 8.37 RMB consensus. Now, you're also going to see that huge gap loss. And don't worry, we're going to get to exactly why that happened in just a minute. You see, to make any sense of this quarter, you have to understand that Baidu is basically two different companies operating under one roof right now. You've got the old legacy advertising business, and it's facing some serious headwinds. And then you've got this new explosive AI engine that is just starting to fire on all cylinders. And this slide, wow, it just illustrates that conflict perfectly. Take a look at the bar on the far left, the core online marketing business. It shrank by 18%. That is a huge drag on the whole company. But then, look at the other two bars. These are the AI businesses. AI cloud infrastructure grew a really powerful 33%, and their AI native marketing services, this includes things like digital human avatars, grew by an incredible 262%. This is the pivot in action, right here on one slide. Okay, so let's get back to that big gap loss. This wasn't because the business is falling apart. Not at all. It was a strategic one-time accounting charge. Baidu took a 16.2 billion RMB write-down on their older, less efficient computer gear. Basically, they're cleaning house to make way for the high-performance hardware they need for their AI ambitions. It's a non-cash charge that actually makes their asset base stronger for the future. So here's the crucial point. AI is no longer just some side project for Baidu. It's now generating over 10 billion RMB a quarter. That means it makes up roughly 1/3 of Baidu's entire core business. The new growth engine isn't just coming, it's already a massive part of the company's financials. So, how does this all fit into what management is trying to do? Well, the message on the earnings call was crystal clear. They are aggressively steering the ship away from being just a search company and toward becoming a foundational AI platform. And this quote from CEO Robin Li, it just perfectly captures their philosophy. Baidu isn't just chasing abstract model benchmarks to get a high score. No, they are laser-focused on building real-world applications, things like their ERNIE 5.0 foundation model that deliver real, tangible value to customers and businesses. It's all about practical application, not just theory. And here are the key pillars that are driving that application-focused strategy. You've got ERNIE 5.0, their powerful new model. You've got Apollo Go, their robotaxi service, which, by the way, delivered over 3 million driverless rides this quarter and is expanding globally. And then you have those high-growth AI marketing services and the cloud infrastructure that we saw earlier. I mean, each of these is a significant business in its own right. And this really brings us to the single most important question for anyone investing in Baidu. The entire bull versus bear debate, it all hinges on this one thing. How quickly can these fast-growing AI businesses reach 50% of the core revenue and officially become bigger than the legacy advertising business? The timeline for this transition, well, it's everything. All right, with all that context, let's put it all together. Here's our take on the stock, how we see it trading from here, and an interesting, kind of plausible trade idea for what could happen next. Post-earnings, our rating on Baidu is market perform. And here's the thinking behind that. We have to acknowledge the phenomenal execution they're showing in their AI businesses. That is a huge positive catalyst. But at the same time, we can't just ignore the very real macro weakness in China and that persistent drag from the old ad business. So until one of these forces clearly overtakes the other, we expect the stock to perform pretty much in line with the overall market. So how could you trade this view? Here's an idea. The thesis is that the stock probably stays stuck in a range for a while, as that exciting AI story battles against the tough macro story. So one way to structure a trade around this is with something called a long-dated call spread. In simple terms, it's an option strategy that lets you bet on the stock going up, but it has a built-in cap on your potential profit and, more importantly, your potential loss. It gives you that upside exposure to any positive AI news, but it's a defined risk position that costs less than buying the stock outright. It's really a capital-efficient way to express a cautiously optimistic view. And of course, as always, this is not financial advice.